Every trader starts out with ambition, dreams of freedom, fast screens, and full wallets, but ambition is cheap. What separates the dreamers from the consistent winners is something far less glamorous: discipline. Discipline isn't about suppressing your instincts, it's about shaping them. A disciplined trader doesn't eliminate emotion. They learn to ride it without getting pulled under. They've built a framework, a routine, and a mindset where they can act decisively under pressure, not because they're fearless, but because they're trained. Here's the truth most traders avoid: you don't rise to the level of your goals. You fall to the level of your habits, and habits are discipline in motion. What's your routine before entering a trade? What questions do you ask yourself when you're tempted to revenge trade after a loss? What structure do you return to when chaos breaks out in the market? These are the moments that define you, not the breakout trades. Discipline starts with self-awareness, not just knowing your strategy, but knowing your triggers. What tilts you? What makes you jump in early? What makes you hold too long? If you can't answer that, the market will answer it for you, and the price will be high. But when you do the work, when you journal not just your trades, but your mindset, your energy levels, your emotional states, you build a mirror, you stop reacting blindly, you start executing with purpose. And here's the magic: the more disciplined you are, the more freedom you have. Freedom to size up, freedom to sit out, freedom to trust your edge. That's the paradox. Structure doesn't trap you, it liberates you. If you want to last in this game, if you want to trade through bull runs and bear collapses, through confidence and confusion, discipline isn't optional, it's your lifeline. So the next time you stare at your screen, heart racing, finger on the trigger, ask yourself, am I trading from impulse or from identity? Build the identity of a disciplined trader and the results will follow. Thank you. People often flinch when they hear the word discipline. It sounds rigid, almost oppressive, something that limits spontaneity or creativity, but in trading, discipline is not a cage, it is a framework. It is a structure that frees you to act with clarity, rather than being a slave to the chaos of the market or the volatility of your own emotions. Discipline is not restriction. It is control, earned through preparation, self-awareness, and repetition. A trader without structure is like a boat without a rudder. When the winds shift, when the storms hit, they're pushed in every direction. They chase moves, they react to noise, and they overtrade out of a desperate need to feel in control, ironically losing all control in the process. But the disciplined trader, even when markets become irrational, operates from a core. They may adjust, yes, but never abandon their process. They follow their rules not because they are afraid, but because they know that the structure they've built is what keeps them free. Free from emotional overreach, free from FOMO, free from the whiplash of regret. This is a critical mental shift. Most people approach trading looking for opportunity. The disciplined trader looks for qualified opportunity, those that align with their system, their edge, and their state of mind. That's where the freedom lies. When you know what your setups look like, when you know the conditions under which you trade best, and when you've rehearsed execution under pressure, you free yourself from having to make decisions in the heat of the moment. There's no debate. The plan is already made. You're not improvising. You're performing a well-practiced act. Without structure, every candle on the chart becomes a temptation. Every bounce, every breakout, every red bar feels like a question. Should I be in this? The trader without discipline is constantly battling the urge to act, fueled not by logic, but by emotion, hope, fear, greed, revenge. And when those emotions take the driver's seat, performance becomes inconsistent. There might be lucky wins, but there is no replicable edge, no pattern of behavior that can be trusted over time. True discipline is internalized. It's not about reading rules from a checklist. It's about embedding those rules into your identity. The same way a professional athlete doesn't think about how to swing or breathe under pressure, the disciplined trader doesn't second guess their process mid-trade. They've trained it, reviewed it, refined it. It becomes who they are, and with that they gain confidence, not the loud, boastful kind, but the quiet, steady kind that comes from competence and commitment. One of the most dangerous illusions in trading is the belief that you need to act to stay in control. But the disciplined trader knows the power of inaction. Sometimes discipline means sitting on your hands. Sometimes the most profitable move is to not make a move at all. Structure allows you to say no. It gives you permission to pass, to wait, to conserve mental capital for when it matters most. And this is where freedom truly shows itself, not in the number of trades taken, but in the quality of decisions made. Every trader has impulses. What separates professionals is how they manage them. Discipline is what closes the gap between intention and action. You may intend to cut a loss quickly, but when that moment comes, if you lack structure and self-command, emotion steps in and changes the plan. With discipline, the stop-loss gets honored, the journal gets updated, the review happens, the trader improves. This is why discipline is not the enemy of freedom. It is its foundation. Without it, you are constantly reacting. With it, you are responding, and there's a profound difference between reaction and response. One is panic, the other is power. To trade well is to accept that uncertainty will always exist, but discipline gives you something solid in the middle of that storm. It doesn't eliminate risk. It gives you a consistent way to face it. It doesn't guarantee success on every trade, but it guarantees that your decision-making process will be robust, repeatable, and rational. Every trader has a strategy, but not every trader knows themselves. Charts, indicators, and market data are external tools. They're necessary, but they're not enough. The markets don't just test your setup. They test you, your patience, your confidence, your ability to stay grounded when everything inside you wants to act impulsively. That's why discipline, at its root, isn't just about rules. It's about self-awareness. Without self-awareness, no amount of technical skill or market knowledge will make you consistent. You can know your edge inside and out, but if you don't know your own tendencies, what throws you off balance, what triggers overtrading, what makes you avoid pulling the trigger, then your performance will always be vulnerable to your own blind spots. Trading isn't just about predicting the next move. It's about managing the person making the prediction. That person is you. And until you deeply understand how you operate under pressure, discipline will remain a theoretical concept instead of a lived reality. Think about it. How many times have you broken a rule not because you didn't know it, but because you weren't present enough to catch yourself? Maybe you took a trade too early, not because the setup was there, but because you were bored or frustrated. Maybe you added size on a loser to get back what you lost, convincing yourself it was justified. These decisions aren't errors in strategy. They're breakdowns in self-regulation, and you can't regulate what you don't recognize. Self-awareness is the tool that turns unconscious habits into conscious choices. It creates space between trigger and response. You begin to catch your patterns not after the fact, but in the moment. You start noticing, when I've had 2 losses in a row, I tend to double risk on the next trade, or when I'm sleep deprived, I become risk averse and second guess my entries. These insights aren't obvious until you track them. They don't show up in your P&L. They show up in your behavior. And that's where most traders go wrong. They obsess over outcomes, over results. But the root of discipline isn't found in the result. It's found in the process that leads to that result. Self-awareness helps you deconstruct that process. It invites you to ask not just, did I win or lose, but how did I show up today? What mental state was I in when I executed this trade? What signals did I ignore and why? These are the questions that transform reactive traders into intentional ones. Self-awareness also creates emotional literacy. You stop labeling emotions as bad or unwanted. Instead, you start listening to them. Anxiety before a trade might be telling you something valuable, that you're oversizing, or that the setup isn't as clean as you think. Frustration after missing a move might reflect an attachment to control. When you're self-aware, you can work with your emotions instead of being dominated by them. You can observe them rise and fall without letting them dictate your behavior. This inner work is uncomfortable. It requires honesty and sometimes brutal clarity. It might mean realizing that you're not just undisciplined, you're avoiding responsibility, or that you're trading not to express an edge, but to satisfy a need for excitement or validation. But that honesty is what frees you, because once you see the pattern, you can change it. And change doesn't come from willpower alone. It comes from reflection and repetition. Journaling becomes essential, not just logging trades, but logging you, your state of mind, your expectations, your self-talk. Review becomes deeper than technical analysis. It becomes a psychological mirror. You begin to spot the hidden drivers behind your decisions, and over time, you develop a map of your inner landscape, your strengths, your weak spots, your defaults under pressure. That map is what allows you to navigate the markets without getting lost in yourself. Self-aware traders also evolve faster. They learn not just from the market, but from their reactions to the market. They see each trade as a diagnostic tool, a way to study themselves as much as their strategy. And that dual feedback loop is powerful. It creates exponential growth because every trade serves two functions. It tests your edge and it tests your execution under stress. You're always learning, always refining, not just your methods, but your mindset. In the end, discipline isn't about perfection. It's about presence. And presence comes from knowing yourself well enough to recognize when you're slipping and being equipped to pull yourself back. Self-awareness is the cornerstone of that ability. Without it, you're blind to your own sabotage. With it, you become your own risk manager, not just of trades, but of your own psychology. Goals are exciting. They motivate us, inspire vision, and create momentum. But in trading, goals alone don't build results. Anyone can write down $500K in profit this year, or achieve a 60% win rate. That takes a pen and a moment of hope, but the market doesn't care about your goals. It reflects your behaviors, and when stress, uncertainty, or temptation rise, you won't perform based on what you aspire to. You'll perform based on what you've trained, your daily routines, your decision-making patterns, your discipline in small moments. You don't rise to the level of your goals. You fall to the level of your habits. This truth is sobering because it asks you to let go of illusion. It demands you trade not based on what you wish to be, but based on who you are today and how you show up consistently. The hyper-forming trader doesn't need to feel motivated every morning. They've built habits that remove willpower from the equation. They know when they sit down at their desk, their preparation routine will guide them. They know how they scan the markets, what they're looking for, how they journal, how they review. It's not dramatic, it's not glamorous, but it's repeatable, and in trading, repeatability is power. The traders who chase goals without building habits tend to rely on streaks. When things go well, they feel invincible. They trust their intuition more than their process. They might even believe they've figured it out. But when the inevitable drawdown comes, and it always comes, they unravel. Suddenly the confidence evaporates. Why? Because there was no foundation, no structure, no discipline to fall back on, just momentum built on hope, not habit. It's in the drawdowns, in the quiet weeks, in the chop and uncertainty, where your habits reveal their true value. You may not hit every goal you set, but if your daily behaviors are sharp, if your process is consistent, if your risk is managed, you'll stay in the game, and staying in the game is half the battle. Most traders lose not because they're wrong. They lose because they didn't have the habits in place to weather being wrong. Habits are like mental muscle memory. When you build good habits, you're automating discipline. You don't have to decide every day whether or not to follow your plan. You don't have to argue with yourself about whether to journal or review. You've made it automatic. You've turned discipline from a burden into a default. And that's where real progress happens, not in big leaps, but in small actions repeated with intention. Think about your best trading day. What preceded it? Likely, it wasn't just one brilliant decision. It was a series of small habits executed well. Good sleep, focused prep, emotional calm, sticking to your criteria, managing risk, honoring your plan. Now think about your worst trading day. Chances are, it started well before the losing trade. It started with a lack of structure, or skipping your prep, or reacting to the market without clarity. The difference wasn't just the outcome. It was the quality of behavior that led to that outcome. This is why elite performance in trading and in anything demanding is habit-driven, not goal-driven. Goals set direction. Habits create trajectory. You may aim to be a disciplined, self-aware, consistent trader. That's a great goal. But how do you live that out in action? What does your morning look like? What's your process after a trade? What do you do when you've had 2 losses in a row? That's where goals get translated into habits. And without that translation, goals are just wishes with a deadline. Another danger of goal thinking is that it creates emotional volatility. When traders hit a goal, they often feel euphoric. When they fall short, they spiral into self-doubt. But traders grounded in habits aren't thrown by short-term outcomes. They're steady because their self-trust isn't tied to results. It's tied to their process. They don't feel successful because they made money. They feel successful because they executed their habits, regardless of the outcome. That mindset creates resilience. The most successful traders are not the ones who set the biggest goals. They're the ones who execute the smallest behaviors with the greatest consistency. They don't obsess over P and L, they obsess over process. They know the money follows the behavior, not the other way around, so they commit to habits that give them clarity, focus, and edge over time. They review relentlessly. They work on their mindset, they build systems around risk, they train like athletes because they know that when stress hits, and it always does, it's not goals that save you, it's habits, every time. Volatility doesn't just move price, it moves people. When the market surges or collapses in seconds, it pulls at every thread of emotion a trader has: fear, greed, excitement, anxiety, doubt, hope. These emotions are natural responses to uncertainty and risk. But in trading, the most dangerous thing about emotion isn't its presence. It's our lack of awareness and control over it. That's why emotional regulation is not a soft skill. It's an edge, a real, measurable edge in volatile markets. In high-stress environments, the mind has a tendency to regress. Logic shrinks. Impulses grow louder. Old behavioral patterns, survival instincts, and unchecked biases rise to the surface. This is where even the most experienced traders can falter, not because their strategy fails, but because they fail to remain steady enough to execute it properly. Emotional flooding overrides process. Decisions become reactive instead of grounded, and before long, discipline gets replaced by damage control. Volatile markets are where edge gets tested, but they're also where edge can shine, if you're emotionally prepared. When you've trained yourself to recognize emotional shifts in real time, you give yourself an internal warning system. You begin to notice, my heart rate's elevated, I'm starting to feel urgency, I'm leaning toward forcing a setup. That awareness creates space. Space between emotion and action, and in that space, you have the opportunity to choose your behavior rather than being driven by it. Traders who lack emotional regulation often experience the market in extremes. They chase when price accelerates, they freeze when it reverses, they overtrade when they're angry, they miss setups when they're scared. This creates a roller coaster of performance, not because their system is broken, but because their state of mind can't stay stable enough to apply it. The emotionally regulated trader, on the other hand, learns to stay grounded amid that same chaos. They feel the emotion, because no one is immune, but they don't surrender to it. They observe it, name it, and return to process. That's what gives them clarity when others lose it. It's not that they're fearless, it's that they've trained their nervous system to stay centered when it matters most. This kind of regulation doesn't happen by accident. It's built through consistent work. Breath control, mindfulness, journaling, post-trade emotional analysis, even physical exercise, all of these train the body and mind to respond to stress more effectively. You begin to condition calm as your default, and over time, that calm becomes your competitive advantage, because here's the truth, the more volatile the market, the more volatile the average trader becomes. But if you can stay composed while others unravel, your decisions immediately have more value. Your edge isn't just your setup, it's your capacity to execute that setup under duress, and the thinner the air gets, the more that matters. Emotional regulation also protects your capital. How many losses in a trader's career came not from the system, but from deviation caused by a triggered emotional state, a revenge trade, an oversized position? An unwillingness to stop out. These aren't trading mistakes. They're emotional misfires masquerading as decisions, and the cost is real, both financially and psychologically. Beyond protection, regulation also sharpens perception. A calm mind processes information more clearly. It sees risk more accurately. It doesn't rush to confirm biases or grasp at trades out of desperation. It recognizes when to act, and just as importantly, when not to. In a volatile market, sometimes the best decision is restraint. Sometimes the edge is patience, not aggression, but without emotional control, patience feels like weakness. The urge to do something, to fix, to chase, to prove, takes over. And that's when traders lose more than just money. They lose rhythm. They lose confidence. They lose alignment with their process. It's worth remembering. The market doesn't owe you emotional stability. In fact, it's designed to exploit your instability. It will present opportunity and risk in the same breath. And in those moments, it's not your ambition or your intelligence that will carry you. It's your ability to stay present, regulate the impulse, and make decisions from a calm, clear state. You can't always control the market, but you can control the state you bring to it. You can't prevent emotion from arising, but you can decide how to respond when it does. That's where the edge lies, not just in having the right read, but in being the right trader at the right moment. In volatile markets, that inner steadiness is often the difference between capitalizing on chaos and becoming part of it. Consistency is often overlooked in trading because it doesn't create headlines. It doesn't produce dramatic stories or overnight success. What it does produce, quietly and reliably, is longevity. A consistent process is what allows a trader to not just succeed once, but to build something repeatable, sustainable, and scalable. It's what keeps you grounded when the market shifts, when strategies evolve, and when emotions flare. Process is what holds the line when performance alone cannot. Sporadic performance, on the other hand, can be deceiving. A trader might have a big month, a lucky streak, or catch a trend at just the right time, and in that moment it feels like validation. But performance without process is fragile. It lacks foundation. One shift in market conditions, one emotional slip, one deviation in volatility, and that performance evaporates. Without a process to return to, there's no way to recover consistently. There's no baseline. There's no edge, just momentum, and momentum without structure is short-lived. The consistent trader doesn't rely on perfect conditions. They rely on preparation. They show up each day not to be exceptional, but to be repeatable. They know the routine, scanning the markets, identifying setups, journaling performance, reviewing trades, monitoring risk. There's a rhythm to their work, a framework that keeps them aligned regardless of external conditions. That structure is what allows them to perform with stability over time, not just in short bursts. Consistency also means knowing what to expect from yourself. When your process is clear, you know what you're aiming to execute, not just what you hope the market gives you. You can evaluate your day based on how well you followed your rules, not simply by whether you made or lost money. That shift in focus, from outcome to execution, is a hallmark of professional trading. It's what creates accountability and emotional stability, because on any given day your P and L can lie, but your process tells the truth. Traders who chase performance tend to live in reaction mode. They chase after volatility, news, or hot setups. They overtrade in periods of boredom and undertrade when confidence is shaken. There's no rhythm, just hope and reaction, and while they may have moments of brilliance, those moments are never under their control. They can't repeat them because they don't fully understand what made them successful in the first place. There's no internal playbook, just memory and instinct. The trader with a process, however, has a feedback loop. They're constantly learning because their system gives them data to study. Every trade is documented. Every result is reviewed. Patterns emerge, not just in the market, but in the trader's own behavior. That awareness allows for improvement. Small tweaks compound, edge is refined, and over time that refinement builds a career, not just a good quarter. It's not about being robotic or mechanical. A good process still leaves room for discretion, but it defines the boundaries within which discretion operates. It gives you filters. These are the conditions I trade. This is how I size. This is when I exit. This is how I prepare. This is what I do after the trade. When you follow that structure, your trading becomes something you can measure and improve. Without it, everything is vague. You can't grow what you can't track. You can't repeat what you can't define. Many traders think they need more information to become better. More strategies, more indicators, more alerts. But most of the time, what they actually need is more consistency. They don't need more trades. They need more clarity in the trades they already take. They don't need to widen their playbook. They need to deepen their understanding of the plays that already work, and that comes through process, not randomness. What's often misunderstood is that a consistent process isn't a constraint, it's a liberation. When you trust your process, you don't need to second guess every decision. You don't need to stare at the screen for 10 hours straight. You don't have to ride the emotional roller coaster of wins and losses. You know what your job is. You do your job, and then you review. That clarity reduces mental clutter. It creates space for performance. You will have losing trades, and even losing weeks or months. That's inevitable. But a consistent process makes sure those drawdowns don't derail you. It gives you something solid to return to rebuild from. You don't panic. You recalibrate. You don't blow up. You adjust. That's the difference between a professional approach and an impulsive one. One builds results over years, the other burns out before it ever matures. In the long run, the market rewards the trader who can repeat high-quality behaviors, not the one who flashes brilliance now and then, but the one who can deliver under pressure, in noise, with patience. And that ability isn't a product of talent or luck. It's a product of process. Consistency is the real edge. Everything else is temporary.